Worst mistakes young buyers make.
I'm not special. I'm a local boy from regional Victoria. Worked 2 jobs to build this portfolio. Have never been on great money.
Because parents will complain about their kids can't get into the property market. But then I speak to parents, I'm like, what are you doing to help your kids get into the property market? G'day all, welcome back to another episode of the Australian Property Investment Podcast. We're always looking for guests that are pushing the boundaries, that are doing some amazing things in their personal and professional and property investing lives. I got a guest today, mate, Harley Giddings. I got to say, dude, as a young bloke, one, you make me feel old, and two, a lot of respect for what you're doing. And the third part is, mate, you're the first broker I've ever had on, a mortgage broker. Yeah. Not that I'm protective or territorial. I think there's amazing brokers out there. But when you got on our radar, and we'll talk about the reason you've also come in as well, I just see, man, you're just a young dude that's getting on with it. In a sea of 20-something-year-olds that complain about the cost of living crisis or the ability not to get into the housing market. And here you are. What do we got, mate? 3, 4 properties?
Yeah, purchased 4, got 3 at the moment. So they sold one. Yeah.
3 properties on your built at 25. I'm like, dude, if Harley can do it, you can do it. And it's probably a message that you're putting out there as well. That if I can do it, you can do it.
Oh, for sure. It's why I started posting in the first place. So yeah, first of all, thanks for having me on, Aaron. Opened the doors today. So as you mentioned, we might talk about it later, but even though I'm the first broker on, you've opened the doors. You've run me through your business as a titan in the broking industry. It's awesome to let you open the doors and that's you're not a closed book, which is pretty awesome.
Mate, that's the whole point though. Like, and they say you learn the most when you teach, right? So for me, I love when brokers come into our office, and I've spoken about it a lot. I love when there's a smidge, a handful of brokers, and I don't have all the answers, but even as I teach others, I learn so much more myself. I'm sure that as you've gone through this journey of teaching, coaching, inspiring others, like it just almost galvanizes in yourself. Like, man, I'm creating my own path here, and I love what I do.
For sure, there's levels to this game for like in everything that we do, but property especially. Like as you said, like I've fortunate enough to have purchased 4 investment properties, but there's a lot bigger fish out there. A lot of people that would have so much more of an idea than me than property. But to someone just starting out, a lot of my audience that are thinking it's too hard to get into property, it's impossible to get into property. Hopefully they look at me as someone that they can kind of recreate or copy and try and get into the market themselves.
Yeah, and you want that. Like, you're like, copy me.
Yeah, absolutely. Absolutely. Yeah. Like, I'm not special. If you, I'm sure we'll talk about my story in a moment, but I'm not special. I'm a local boy from regional Victoria. Worked 2 jobs to build this portfolio. Have never been on great money. Don't have wealthy parents that a lot of my comment section give it to me saying bank of mum and dad and stuff like that. But like, I've just built this from hard work, educating yourself and trying to surround myself with people that have done what I want to do. And case in point, right here today with Aaron.
Oh man, thanks. I appreciate that. Mate, Zach, well, let's go there because I didn't want to know your story coming because I want to be fresh, like a viewer would or a listener would, to go. I'm so curious to know your story. Yeah. At 25, when did you buy your first one?
22.
22. Yeah. That's not normal for a 22-year-old.
Yeah.
Yeah. How? So first of all, how? And then why did you do that?
For sure. Well, I might rewind just a little bit to give a bit of context how I got into my first at 22. So as I said, I've always had a work ethic. I grew up in regional Victoria. Mum's a hairdresser, dad's a firefighter. So like we're just
really medium incomes, yeah.
For sure. Like we're definitely not poverty or anything like that, but we're middle household people here in Australia. So always taught
at work. Regional, whereabouts are we talking?
So about an hour north of Melbourne. So kind of in between Bendigo, about an hour between both Bendigo and Melbourne. So just a local footy culture, small town. I think there's like 3,000 people that live there. So not massive. But yeah, just humble kind of upbringings, but always taught like family first values, which I try and instill in the business I'm creating today and also the work ethic. So since about 14, I think I've had multiple jobs for the last few years up until starting this business. I'd work 2 jobs 7 days a week. I'd work in broking for my full-time job, and then I'd also work at BP, which if anyone knows me through my content, people still know me as the BP guy just because I love that job. It was getting like $30, $40 an hour serving coffees. Great bloody money. Like people look down on service station workers. They've got it figured out. It's bloody good money, and yet it's honestly pretty easy work on top of a full-time job. But I mean, I still had to work it. They were 60, 70 hours weeks. And I remember, I guess when I was about 15, 16 years old, that's when my investment journey really kind of kicked off. I remember Mum bought me the typical investment book, The Barefoot Investor. So shout out Scott Pate with that book. And it taught me about compound interest. And I knew pretty early on that if I wanted the mansion and the Lamborghini, you know, when you're a kid and you've got these high aspirations.
I'm not a kid, I still have aspirations, so don't worry.
Yeah, so I knew that to get to like that level, I'm going to have to invest. So I kind of learned about compound interest pretty early on, and that the more like you invest and the longer time you're in the market, the better your return. So it's not always how much you invest, but more so how much time you spend in the market and let compound interest do its thing. So that's where my journey started. I started investing in shares at about 15, 16 years old. Got Mum to set up a brokerage account because you couldn't buy shares under 18 years of age. And I started there. I'd invest.
Did your mum think you were crazy, or was she's nurturing this?
No, a little bit crazy. Like we're not investors. Mum and Dad, up until I kind of have pushed in the last few years, had never invested in property, like shares or anything like that. So it's not really their cup of tea. But she was all ears. They're my biggest supporters. So she was the first one to open up that brokerage account so that I could invest in shares, and they were just index funds. So not trying to beat the market, not trying to be Warren Buffett beating the market consistently. I just knew I wanted my money in the market, and long term, this is what I would have. I still remember looking at the compound interest calculator going, shit, if I put 10,000 in a year for the next 10 years, I'm going to have millions of dollars. Like, this is ridiculous money. But remember, that just changed it flipped my switch. And then throughout the journey from 16 to 22, continued working. That work ethic didn't change and kept investing. But that's when I suppose I started learning about leverage and how a leverage return can like, I guess, just multiply your results and your returns as well. So that's how I ended up in property at 22.
If I think my mates at between 18 to 22, leverage return was not a word that everybody would use. It was going out for a night out.
Yeah.
It was, could you get some phone numbers on a weekend? Mate, this is it was someone in your circle, any mates that are just going, mate, we're doing this together, or are you just a lone wolf doing this?
I was a little bit of a lone wolf. Like, don't get me wrong, Aaron. Like, I loved the night out, but I guess I was a lot more frugal. So instead of being out Friday, Saturday, Sunday, I'd go out for the Saturday night. I'd pre-drink and all the ways to kind of save money, because I had these financial goals and things that I was chasing. I've always been fairly ambitious as a kid. But yeah, in terms of like mates and family, I guess I didn't really have anyone like that. A lot of books, a lot of podcasts, a big fan of podcasts and educating yourself that way. But I mean, up until I started posting content in 2024, only one of my mates actually knew I had investment properties, because it just wasn't something that comes up in small town Victoria. It doesn't come up that I just bought another property. Like, you sound like a bit of a tosser if that's coming up.
I'm glad you thought about that, because we even talk about when we have clients that have got 5, 6, 8, 10 investment properties, they can't even tell their family, let alone their friends. They will literally lose friends the second that they say that. So it almost is a bit of a lonely journey.
For sure.
That strangers will celebrate your successes more than your inner sanctum will sometimes. And I think that messes with some people's heads as investors, to go, I thought people would be happy for my success, but they quickly figure out who turns on them the second they say they've got a portfolio.
Yeah.
Isn't it? It's a bit of a tragedy.
Absolutely. I mean, I've seen that even with the content too. Like, as I said, none of my friends, no one really knew, other than my like immediate family, knew I had investment properties, because it's just not something that comes up. Money's a bit of a taboo topic, which is one of the, like, I guess one of the main themes of my content is trying to make money not a taboo topic. Like, it should benefit everyone knowing how people are making money, how people are investing, and kind of just giving this education that I feel like a lot of people lack. Like, if your parents aren't in property yourselves, or you're fortunate enough to have mentors in that space, like, property investment and getting into the property market is quite daunting and overwhelming, and to a lot of people seems impossible, which was one of the main reasons I got to that point when I was 24. I had 2 investment properties at that time, and I'm going, I'm not anything special if I can invest in property. Like, I feel like majority of people could make their way into the property market. So I started sharing tips, my journey, what I was doing to kind of fund this portfolio. And that's kind of how the property with Harley Page has kind of taken off the last couple of years.
It's fantastic. So what is the secret? So you bought shares, use a bit of an accelerant to get into your first deal. How did you buy the first one?
first one. So used a buyer's agent for the first one. So even though I'd read that many books, listened to all the podcasts, I feel like you don't get every piece of information you need to make that decision. There's a lot of data to it, a lot of due diligence, all that kind of stuff. And I knew how important your first investment was. So if my first investment doesn't grow or I buy a dud, like I could get stuck pretty quickly.
It's backwards.
Absolutely. Could lose money very easily. So I knew, I just knew, I guess, what I was capable of. So I sourced out a buyer's agent, one I did a lot of research on. I think that's important too. Equally important that you do your research on who's actually buying the investment for you. And we use them to buy this investment property. And as I said, I'm based in Victoria, but we bought in Perth. So at the time, Perth was probably not the most glamorous place to buy. It's gone from like 10 years of kind of negative growth to no growth that previous decade. So there was a lot of, I guess, like people were scared to invest in that market. So it was a lot of trust as a 22-year-old Victorian buying 4,000 kilometers across the country as someone that had never invested in property. So telling mum and dad what we were doing was a pretty, like, I think they were pretty nervous. There was a few restless nights of sleep for them.
Mate, as a parent, I got a 7 and 5-year-old. I can't imagine the day that they tell me what to do with my money. Like, honestly, because I will always see them as small kids in my eyes, right? Maybe that's how my parent, my mum will see me as well. How do you parents then get to the point that you're like, they take you seriously? Because there's obviously, you got a good head on your shoulders at that point. And we're having, like you said, it's a taboo topic. Even between couples, it's a taboo topic, let alone between parents and children. So how do you have this conversation?
Absolutely. I feel like they've always known I've been investment focused, finance focused. That's always, I guess that's my cup of tea. And as I said, they're so supportive of it. But you're right. I mean, I was 22. They're in their late 40s. They're like, we've built all of everything we've built from hard work and save your money, pay off your owner occupy home, like very, I guess, risk averse.
Very traditional.
People, very, very traditional, but not necessarily how I could attack the property market. Because I mean, I'm not buying houses I think they bought their first home for like $20,000. Like it's a very different time to invest in property. But like that first investment definitely was like, felt like almost like jumping off a cliff. There's a lot of trust there, but now, I mean, fortunate enough to have bought multiple properties since then, and they're really starting to progress and grow, and the runs are starting to, I guess, show up on the board. So, I mean, my proudest moment now is like I pretty much run my parents' retirement. Like they bought 2 investment properties last year. They're fully trusting now that they see that the 22-year-old that knew what he was talking about is now the 26-year-old today that really does know what he was talking about at that stage. So yeah, I feel like it's a lot of trust, and yeah, my parents have always supported me through it.
Well done, man. Well done. It's a great relationship. So you got your first one, Perth. That's done well. Then the second one?
Second one, yep. So from there, I just a bit of a property like nuffy. I go all in when I guess it's my personality. I'm all in no matter what I do. So if it's footy, I'm all in. If it's finance, I'm all in. If it's building a car, like I'm that all in type person. It's got its positive and it's got its negatives, but that's just who I am as a person. So that like first property was with the buyer's agent, and I knew I had big aspirations, big goals of the portfolio I wanted to build, and I knew as not a massive income earner, 15 to 20 odd grand every time to buy a property was just going to, I guess, slow my growth a little bit. I do see the value for people that aren't interested in property or time poor. Like it makes a lot of sense. But for me, I wasn't time poor and I was willing to kind of put in the work. So I spent that kind of year between buying the first and my second really educating myself, seeking out mentors, courses, mentoring, like all that kind of different stuff, paying for my education. And from there, I bought the second one on my own, again in the Perth market, different market this time, but bought that one for 420. And yeah, I think valuations would be 850 to 870 about That's 2 years later. So pretty crazy growth.
That's crazy. People can't save that type of money.
I know.
You can't save it. Not even at your age, as a fully grown adult at 40 something, you can't save that much
for sure
in a couple of years.
And that's like I say in my content, like one good investment can change your life. So like that property I bought the end of 2023, it's now the start of kind of 2026. So in just over 2 years, it's doubled, and that's $450,000 worth of capital growth, roughly 200,000 of capital growth per year. When at the time to buy that property, I was working 2 jobs to earn 100 grand a year.
Yes.
Making more than double what my income was working every day just by owning that one property.
I'm glad you said it, because I said property is the best hedge against your income, right? Mate, again, this will be my age that comes through, but I see people now in their 40s when they get to certain levels in corporate, my uni mates, where their risk is now redundancies because they get to a certain level, there's nowhere to go, or restructures, for example. And I'm like, mate, the best thing that you could do to hedge against your income is actually go and buy properties, because that will increase sometimes more than your annual salary will if you bought in the right location, the right property, for example. And then the worst case scenario is you sell and you take your cash and you park it into your home loan, for example. So yeah, there's always, I think people come into it, and you're going to see, you'll probably see this day to day in your conversations. People think it's the risk to buy the property. I'm like, well, it's more risky to not buy it.
Sure. Opportunity cost. Massive. Like I talk about all that in my content as well. There's risks in anything you do, whether you're investing in shares, investing in your own business, like property, whatever it may be. There's always going to be risks associated. And you can definitely mitigate those risks, having buffers in place, having the right insurances, making sure you've got the right professionals and people that have done what you want to do in your corner, so that all the advice you're getting is correct. But the biggest risk, I mean, with inflation and the cost of living, to me, a bigger risk is not taking any action at all.
Nicely said. Who's the broker that took you seriously at 20-something?
Callum was the broker, but I mean, again, as you know, like I probably went through 2 brokers to start with, and not every broker's like built the same and helps the same kind of clientele. So yeah, I went through 2 to find him, and he really set the portfolio up.
Imagine you took the first no.
For sure. If I took the first no, I would have been stuck at 1 or 2 properties. I wouldn't have got to 4. I wouldn't have structured the debt correctly. Like it's all about, as I said, getting the right people in your corner that have done what you want to do, and work with clients building the portfolios you're trying to build yourself.
And I think if you even look at what you've done and you got to 4, so it's what I call the double. So you had 1, you doubled that to get to 2, now you've doubled that to get to 4. And when people try to go, man, I'll never get 4, I'm like, mate, listen, if you start with 1, you can double your portfolio pretty easily. And okay, and then you can double that again, because 2 compounding gets you to 4. 4 compounding gets you to 6 and 8. And so you can 8x your portfolio if you'd really kind of applied the right methodology to it as well. And you and I, again, you probably on a phone call and you're telling people, like, well, you got about 8 properties, you know that, right? And there's this awkward silence. And I don't know, I feel like a snake oil salesperson. No, I'm serious, you can. Do you have those conversations with people?
For sure. I feel like people just probably underestimate what's possible. And even like, I'd say majority of my clients and people that come through my content and stuff like that, they'd be 23, 35. So probably first, second time investors. And it's like, as I said, it's just probably a lack of what you don't know. What you don't know is possible. So, I mean, as we said, you buy one good investment, it can really set you up and platform you, whether it's to continue building that portfolio. Like some people don't have goals of having the portfolio I'm trying to build, and that's okay. It might be 2 or 3 great investments that can set their family up.
Can I challenge you on that though, right?
Mm-hmm.
You say, I don't want to have the portfolio you do. Let's be honest, it's 4 properties. It's not 40, right?
Yeah.
I'm saying that purely as a compliment.
No,
and I come back to this, even with my team, but you've got the potential to.
For sure.
Why wouldn't you want to reach your full potential? And I think that's probably where it's maybe our role and responsibility as their broker to go, here's what you're capable of doing. Now let's go on this journey together, because if we can unlock your full potential, that's a game changer. Imagine you stopped at 2 and you said, I think I'm pretty comfortable here. You probably wouldn't be here today. You probably wouldn't be where your business is, which then employs a few people, which then has the reach of hundreds of thousands of people across social media, for example, because you chose to tap into your full potential. And just the ripple effect of that, like that to me is like those pinch me moments where I'm like, if you just like tapped into that notion of full potential,
for sure,
you don't know where it's going to take you. And I'd be curious to go, well, the notion to get from 2 to 4, what drove you at that point?
2 to 4, I mean, again, it goes from like, I say it with my clients all the time, is I'm very big on goal setting and having something that I'm working towards. So yes, 2 to 4 is great. And obviously that's going to continue building out my asset level and all of those great things, seeing the capital growth appreciate, my net worth appreciate, all of those things. But overall, like I'm working towards a goal. So for me, it was a passive income of 200 grand in my 30s.
Yep.
I just turned 26. Sorry, on Friday. Keep
Happy
getting
birthday.
age. Yeah. So yeah, 26 now. So I've got basically I have 13 years to achieve my goal of passive income of 200K in my 30s. So like for me, 2 to 4, yes, it's great. Continue pushing the envelope, but ultimately, it's like it could be like when people say 2 to 4 properties, you could be buying $200,000 one-bedroom units in a place you wouldn't want to buy. So it's for me, it's not so much the number, and I'm trying to get away from the number and more so like buying the right assets for what I need to do. Because ultimately, it's like to get to that 200 passive income. For me, I feel like I'm going to need 3 or 4 million net of like as in no debt attached to that property portfolio with a roughly 5% yield will get me around that mark that I want to be at. So for me, it's not so much doubling for the sake of it. It's still making sure that we're really buying the right asset to get me to that goal.
Well said. I always say that to everyone, like, don't worry about the numbers, the ego in the number.
Yeah.
Because like you said, you could have some really crappy properties or small one, but it's just to say I've got 4.
For sure.
It's the quality over the quantity. And then off the back of that, it's actually what that property is, it's like me I've got this X many team. Well, mate, if they weren't doing their job, there's no point keeping them. That's the harsh truth. So there's no ego in having the number. It's more going, hey, what purpose are they serving? Because if you're working towards a goal of 200K, then you'll be very diligent about what you're putting into the portfolio to get the result back out as well. So, hey, kudos to you. I feel like I'm talking to an old soul. There's not a 26-year-old, mate. I think you're going to do well in broking. If you've got this attitude, and mate, for some listeners, they don't really care about the broking industry. I love the broking industry in the sense that it's obviously given me a lot. You're starting out your journey. I feel like 10 years in, I look to the people that you probably won't even know. There's like Jeremy Fishers of the world. There's Daniel O'Brien. There's some really good people that went before me that did something similar, but they passed the baton on to me.
Yeah.
They opened their doors to me, mate. That's why I do it, because I know how much of an impact that had when I was around them. I was around their energy, and they were just like, mate, do you want to come into my office? I'll give you everything.
Yeah.
And I just grew up with that type of sentiment. So any broker that comes in, I'm like, mate, take it all, smash it, and I'll be happy for you to win, because that's exactly what we're doing for clients. It's like my win isn't coming at your loss. Your win's not coming at my loss, for example. And we can all win at this game as well. So, mate, in terms of broking, how did you choose to go into broking, say, compared to, say, BA, for example? Or what made you gravitate to this industry?
For sure. So like when I was starting, I guess, again, back 22, 23, I was kind of in the finance industry. So I worked for NAB in like the credit kind of side of things. Always been relatively good with numbers, always interested in, I guess, money, finance, all that kind of stuff. And then found my new love, which was property and property investment. So I was kind of like, how can I combine 2 of those loves? And pretty well ended straight up in mortgage broking. So for the last few years, had worked at a really solid company in Empower Wealth. So under some great leadership there with Ben and Bryce and those ones there. So learnt all about, I guess, property investment, how to structure debt well, equity releases, like all that kind of stuff that you need to basically talk about the lending side of things. And that, it pivoted me into broking, and then fortunate enough with the following and the community we've built online with the Property with Harley page, that now we've got people that want to work with us, which is awesome.
It's incredible. But I'm glad you stepped into a good brokerage. It says to anyone, like, imagine you stepped out there with no knowledge. How much do you reckon you picked up working in Empower Wealth? Like, product knowledge, credit knowledge, process knowledge, people knowledge, for example, relationships. How invaluable was that time compared to if you tried to jump out there and do it on your own?
So invaluable. Like I look at brokers now, and again, there's no right or wrong way to necessarily to do it, but like the diploma that we all do is basically a piece of paper, and like
it's probably the toilet paper is what it is now.
It is, like it doesn't teach you anything. So those like people that do the diploma and then go out on their own, like far out, I couldn't imagine like going out and trying to lodge a deal, look up credit, work out borrowing capacities, and then like that's just like the process side of things, but also like the people first attitude that the company I was at, like really big about like customer first, make sure the experience is great, which is the second half of broking and keeping these long-term clients for life, which is what we're trying to build here at Dizzy. But yeah, everything I've learned has basically come from on-the-job training. So for anyone looking to kind of enter the industry, I'd definitely be looking to try to work for a brokerage that is like, there's many different brokerages out there, but I'd say try and work for a brokerage that aligns with what you want to be as a broker. So if you're investment savvy and that's where you want to go that way. If it's commercial, we'll go to a commercial brokerage. If it's first home buyers, like there's something for everyone out there. You really niche down and find that brokerage that you align with.
Well said, man. Well said. Yeah, that's probably one thing. I think even as you start to flourish in the broker industry, it's not that you get protective of it, but you go, man, we don't need 23,000 brokers that are mediocre.
Yep.
You could probably do it with half the number in there. Same with properties, like you don't need quantity, you need quality, because the more that we've got out there, like I'm sure you probably saw like the article at CBA, a few of the banks saying they got bad, dodgy loans coming through AI created applications. Like, yeah, in any industry, it's going to be good, bad, ugly, great, fantastic. And you go, right, we don't need 23,000, maybe need less.
Mm-hmm.
And I think the next part is the industry likes that real pathway program. There's no way you start in real estate and become the real estate principal from day one.
Yeah.
Mate, you start in property management, you work your way through leasing, then you work into a sales associate, then you work your way into like real estate sales and become the principal. Mm-hmm. Whereas mortgage broking, literally, you and I literally could do a diploma or Cert 4, and then the very next day we're accredited mortgage brokers, and it's out and we're practicing on real life clients. And you will at time, you've probably seen it already 8 months into your gig, where you're like, again, we don't want to say that was wrong advice. You go, how did you get to that? How'd you get to that mistake? That happening? Like, I don't know, man. The broker or the banker just did it this way. Like, all right, cool. Let's fix it up. I'm glad it come across our table so we can fix it and help you move forward as well. Because, mate, you know it. You could have known with all that data and research that you did in that year that you were doing it, you could have known that the right place to invest was Perth. Yeah. But if you didn't have the finances to buy in Perth, you wouldn't be able to get in.
Sure. Yeah.
So knowing the market or knowing where to buy, and that's what I see on YouTube a lot, which is everyone's telling everyone where to buy. But the reason why I say people don't get past 2 or 3 properties is because they've never been shown a blueprint. They've never been shown a model to go, here's financially how you get past it as well, right?
Absolutely. I mean, it's a game of lending after all. If you're trying to build a portfolio, it's no secret. You have to structure your debt correctly. And I mean, there's no magic potion. At some point, it is related to what your income is. Like I feel like people hear structures and different way to structure debt. Like there is definitely ways that you can structure debt to help you continue building your portfolio. But ultimately, income to a degree absolutely matters. So if you're trying to build a portfolio of 5, 10, 15 plus properties, like you're probably going to struggle if you're on a 70, 80K income. You're going to have to continue increasing that income. But you're absolutely right. Like working for that brokerage, getting those runs on the board, doing the actual work and learning on the job, while like these are some of the biggest financial decisions people will make in their life. So it's like structuring it incorrectly, cross-collateralizing, like not doing it right can really have a negative effect on people. And that's why I guess I can see it with you, but like you take so much pride in making sure that it is a right decision and that you can look back in a couple of years and go, well, that's still a decision we stand by for that time.
Correct. Yeah, I think to put your name to it, that's why we were speaking earlier about, how we try to do things. I'll talk about how we work when a strategy comes across my desk. It's like the pass at a fine dining restaurant. If there's something that's out of place on that, I'm meticulous. I'm like, fine dining, you wipe the plate, for example, or it's like that everything goes on in a very particular way. I'm like, don't be sloppy with the standard, right?
Yeah.
And I've got that saying, like, how you do anything is how you do everything else. So it becomes a very hard standard when you're trying to scale. You either go down the path of like Guzman and Gomez and you scale that way. But if you're trying to maintain a standard, for example, like that, we become tortured souls, man.
Yeah.
Because you're like, I need it done that way. And you don't want to become like that hard ass, but you drop the standard and then it's not what it used to be.
Sure.
And you'll cross that bridge as you scale, and it's going, man, one thing I could probably say is within your team, as you're building, it's going, how we do anything is how we do everything. And the standard that we live and die by as we scale will continue to be the lifeblood of the culture that you're building in your business, mate. So I'm very excited to see somewhere like you, because you're the new breed of broker.
Yeah.
The old breed of broker, mate, they didn't market, they had a few partnerships, they relied on their trail. The new breed and broker, like someone like yourself coming through, it almost pisses the old breed off a little bit.
It does. I'm sure it does. For sure it does. Yeah. And that's like, it's almost our motto. Like when I'm hiring, like I'm not trying to be the typical bricks and mortar old style broking. Like I'm trying to make it fun, new. Like, I mean, talking about principal and interest versus interest only lines online, boring.
Oh,
It's crap. Like,
good. I see. Boring. Experienced brokers talk about offset accounts. Like, dude, come on, you've been doing it for 20 years, man.
no one cares, but it's like that's what I try and get across with my content. I want to make finance somewhat engaging and try and get these people involved in property sooner. Because I mean, average first home buyer here in Australia is roughly 37 years old.
Hold on.
So it's like, if I can help some early 20s, mid 20s, late 20s people get into the market, like what difference can that have on their future family's life? Like that can change when they retire. That can change how they show up as parents one day. Like it completely changes your life by getting in 5, 10, 15 years earlier than the average person.
Mate, correct. You're absolutely spot on with this. I made some huge errors when I started out. If I'd bought good quality assets like you did, it would have changed the entire trajectory.
Yeah.
Entire trajectory. And people don't realize that. And it's a blessing, a bit of scar tissue, or time under your belt a little bit, going, man, if I just made that decision a little bit better. Now there's nothing wrong with making a decision that was bad and you can course correct pretty quickly.
Yeah.
But then to live in that and dwell on the loss, that's probably where others just go, man, it's happened. I can't keep looking at the rearview mirror. I've got to look forward and get on with life as well. If you make a mistake when it comes to investing, it's the journey. You absolutely will make mistakes when you invest in property. Like anything in your career, you make mistakes, you fail forward, you get on with it, and you put your big boy, big girl pants on you, and you keep cracking on. But you probably get this a little bit, and I don't read comments too much, but I don't know how you go. But there'd be some 20-something-year-olds listening, or we've got parents that are listening that have kids that are 20-something. How do you get a 20-something, one, to believe in themselves, and two, to then take some action here?
For sure. Like when I speak to like 20-year-olds, and I get a lot of DMs, and they're awesome people, like really open up there. I'm Tom, I'm 20, I've just saved 10,000. I really want to get into the market. Like I get so many messages like that, and I don't share that kind of stuff much. I don't know. Not that it feels like bragging, but it just doesn't feel right for me sharing that kind of stuff. But it's one of the main reasons I keep my content going, is I get so many messages like that, that my little cringy skit or video is like, it's actually having some impact on these people's lives. Like they're making decisions to, instead of financing that new ute or buying that brand new Hilux, I'm saving for my first property now. I've made a conscious decision that I'm looking to do it. So like for people working out, like, I guess, whether they can do it, I always get them to start off with just some basic goal setting and coming up with your why. So I was very clear on my why. As we said, like investing in property isn't all sunshine and rainbows. Shit's going to go wrong. There's maintenance going to pop up. A tenant's left early. Like there's always going to be something when you invest in.
We could do a whole episode on everything that could possibly go wrong, and it would literally take some people out of the market, because like that's everything. For sure, mate. Things could go wrong in your career. You could work for a boss that you hate. The company could move locations. There could be redundancies. AI could take, and so you could literally just go, man, what's the difference? They're both ways to make money. Just choose your hard.
Absolutely. And it's like, so back to that point of there is going to be shit that goes wrong. So for me, when people are working out whether they want to get into property and like getting that confidence behind them, I just drum down on goal set. What are you chasing? And two, your why. So I was very clear, like working 2 jobs 7 days a week. My mates were out, like there was sacrifice there. Sure as shit didn't want to rock up for work 7 days a week, but I did it because I knew what I was building and I knew why I was building it. For me, my why was my family, who have given me every single chance to be successful, a supportive family, have been able to live at home like cheaply, which is very fortunate. So I want to look after them, and also my future family. I want to be that dad when I'm in my 30s that can go to the sports games, to school musicals, whatever it may be. And that's like, I feel like to me, that's the whole point of investing in property, is buying back your time and being able to show up as the best version of myself in my 30s, which is kind of the whole goal of the passive income. So like for people looking to get started, like get clear on your why and get clear on what you're actually chasing, because I can promise you they're going to be those hard days, those maintenance things that come up when you invest in property, and also the extra shifts that you don't want to do. Why am I doing all these extra hours of work? And it's like having a clear why will get you through those tough times when, like, if you don't have that clear why, it's easy just to throw it away, and it's just a goal that's lost, like many goals we set every year.
Yeah. I have a feeling that even if you did hit that goal, you'd probably still keep working.
It's going to keep moving. I said before, I've got that addictive personality, and I mean, it's probably something I'll need to work on at some stage, but it's what's also got me to this point. But I mean, yeah, there's a fair chance the goal line's probably going to continue moving, but yeah, problem for another day.
That's the whole point. We come back to that, circle back to that whole notion of potential. So, hey man, you crack that code of 200 net passive, you go, what's on the other side? Maybe it's 400.
Yeah.
And not a vanity thing. It's going, I'm just going to scratch the itch and see if I can try it. Like, mate, I don't know where your followers see. Maybe if I could double that follower base, I could have a bigger impact.
Sure.
No vanity metric, but you say, I'm just going to potential and see what's on the other side. So, mate, I look at people like yourself, and I've been around some really good high performers, and it's never about the number and that's it, I'm done.
Yeah.
You set the target. It's almost like a non-negotiable where you have to get there and it will work. Yeah, you will expect to get it. And I think a lot of people, and I like you said, you've paid for courses, you've done a lot of that self-improvement work. We've been the big advocates for, spend that money. You spend 20 grand on a buyer's agent. Would you spend 20 grand on your own personal development?
For sure.
Right?
Yeah. Best investment you'll make.
The best investment you'll make. And I think you've been around good people like Ben Kingsley and Blyce. Like they're really big proponents of that as well, right?
Yeah.
And I think if you can latch onto a group that then sees the best in you, for example, you need a partner. If you're in a partnership, your partner sees the best in you and go, mate, we're bulletproof. We're in this together. There's no finger pointing when things go wrong, for example. And it's like, mate, we're going to make this work, hook or by crook.
Yeah.
That's when you know you're in a really good partnership as well. So for any young people that are listening, what can they do off the back of today to, like you said, is it the goal setting? Is it the planning? Is it a chat? Is it a conversation with parents about what they could do financially? For example, how does someone get going? Because they're going to listen to this and go, I'm amped.
Yeah.
Now what do I do?
Yeah, for sure. I mean, 2 points come to mind. For one, I'd straight go out and seek people that have done what you would do. You've opened your doors today as someone well established in the industry. I mean, I came into broking. Obviously, I was in the industry a little bit, but starting my own business, I wasn't sure, like, was everyone like not sharing secrets, closed book? Like, I didn't know if everyone thinking, I don't want your leads to get filtered into my leads. And like, it's been it's completely the opposite. Like everyone, like my clientele definitely isn't your clientele and vice versa. So it's like, I feel like seeking people that have done what you want to do. So if it's building a portfolio, go reach out, look up some people on LinkedIn, message some people that are doing what you want to do, whether it's a broker, buyer's agent, whether it's just a property investor, whoever it may be. I feel like finding mentors is a really big part and something I benefited a lot from. And I have like this, I guess, plan. I used to always want 2 mentors when I was going through my property investment journey. One who's like the big whale that I'm chasing that I can't relate to once. They've got the dream house, the dream business, they're where I want to end up that I can't relate to, but I know that's roughly who I want to be chasing and who I want to run myself like. But then the second one, probably the more important mentor, and you don't need like a relationship with this person. Like you can have a silent mentor that you're just constantly following and seeing what they do, what they put out, all that kind of stuff. But that second mentor that's only 1 or 2 steps ahead of where you are. So like for myself with my content, as I said, I'm definitely not someone that knows everything. I'm not a property investor with 20, 30, $50 million worth of property. But hopefully people look at me like I'm the 1 or 2 steps. I'm relatable enough that I've never been on a great income, but I've built this. And like you have to get to my level if you want to get to that higher level that you're chasing. So I feel like that's probably the biggest thing is finding mentors. And the second one, I mean, people are probably going to scoff and probably turn this this Spotify podcast off straight away. But I mean, your budget. I feel like the biggest problem I see with like first time investors trying to get into the market is people just not really knowing what they're doing with their finances. So if you've set up a deposit goal of what you're chasing to get into the market, like that's one half of it. The second half is also seeing go through your spending the last few months. I feel like people don't actually look at what their spending was the last few months. So let's say you're trying to save 60,000 for the year. It's 5,000 per month. If you reverse engineer that, that's what you're trying to save. But how often do you set that goal with your budget and then actually check in every month? Like I feel like a lot of people set that goal, but who's actually checking at the end of the month that you saved that 5? And if you didn't hit it, why didn't you hit it? Why were you spending so much money there? What were you doing? So I feel like the budget's one half and then the other one would be reaching out to someone you want to be like.
I love it. I love it. I'm going to let you run the podcast from now on, I think. Mate, this is exactly as you're listening, my mind is just ticking over because the similarities are uncanny. Like I've got a target, my personal finances target. I'm looking at this thing and save as a bookmark on my favorites. So I'm looking at this probably every single day. Every single day. I'm like, Bernie and I will do our monthly reconciliation. I'm like, right, where's this income at?
Yep.
And it's green or red. Like it's on it's the target. And I'd called it the road to X dollars at the end of the year. And I'm working backwards, just going, right, where's this target need to be? I've broken it down by month.
Yep.
And it's red or green. And if I'm not hitting it, I'm going to march over to Bernie and go, what's happening here? And let's have an open discussion about where we're on track and off track.
Yeah.
It'd be the same. I mean, people go PT, on track, off track. Savings plan is on track, off track. And your mates, you can't expect your mates to do this. You can't have that accountability with friends.
Yeah.
Yeah. So if you're relying on a friend, they're not there for that. I know my mates were happy to have a fun time, but they're not here to talk this way. So you need to be uncommon against, with common people where you just go, man, I'm going to think very differently. Especially 20-somethings. Yeah. To get into the market as a 20-something is uncommon.
For sure.
And so if they reach out to you, I think we don't care who they reach out to, right? You, me, we're not even fishing for business. You'd be oversubscribed tonight. That's our conversation for my broker. So I'm like, how on earth are you handling all this inquiry? Like, oh, I'm not. So it's almost an irony that you'd be out here kind of marketing yourself and you're like, I'm over capacity. Yeah. But with abundance also comes another challenge where you go, man, I can't help people one-on-one. But maybe with my content, I can help you move forward. And here's what you do. Okay, so you need to get into a 450K property, 12% deposit, plus your stamp duty cost, Yeah. So generally in for maybe 60, 65 grand. Can you get there? Yeah. It's $1,000 a week. Could you pick up an extra shift? Yeah. Work in BP, Woolies, do anything you can. Because at 20-something-year-old, man, you've got the energy.
You got time.
You've got time.
Yeah.
You could probably live at home for a bit longer. So no one's really expecting you to move out. You don't need holidays because, mate, they're not going to be lavish anyway. You could find. So what's the excuse?
Absolutely. That's literally what my content is. What is the excuse? And not pushing people into doing like down that path if you don't want to, but more so just like waking people up that might be on cruise control and just doing what the norm is and being like, well, maybe this video is a pattern breaker and now that blonde bloke that was a bit cringe just said something that I align with and now want to save for a property and change your life.
If I jump in here, one thing that I'll probably see a fair bit is you say you want it, and it'd be like me saying, I want to get fit, but I'm going to eat the chocolate. You say you want it, but you're going to do something else. So your audio doesn't match your video. The one big thing I'd probably say is if you're driving a car that's worth over $20,000, I'd ditch that, I'd sell it, and I'd go and buy a Toyota Yaris for $5,000. Damien in my business, my brother-in-law, and we had the worst cars in the whole team. And I'll tell anyone that will listen, we had the worst cars. We're the two brokers in the business, but we have the worst cars in the team. And that money's either going back into our respective parts of our business or it's going into our portfolios, for example. And it's like, how bad do you want it? Yeah. And if you're driving a car, it's probably worth over 20 grand. I'm not here to say, go and drive a shitbox because that's unreliable. It's going to cost you more maintenance. But if you're young, you're not going to throw down and compete with someone because you can go and get a personal loan to go buy a nice car. Yeah. Ditch the car.
Absolutely.
Go and buy a shitbox, put that money into property. And when that property appreciates, then you go and pull out your 20 grand in equity. You absolutely need it to appease the ego. Yeah. Go nuts. But the biggest mistake I made in my 20s was going buying cars.
For sure. I mean, I've got a Kia Sorento. It's work out, like I did a video the other day on my net worth and I was like, definitely have the worst car out of any of my mates by a mile. Yeah. But my net worth would be close to $1 million and I drive a $7,000-8,000 shitbox.
When I look at people's incomes annually versus what they spend on a car, it's almost they're spending the equivalent of annual salary on a vehicle. Yep. And I'm sitting here scratching my head going, you're telling me you don't have the money to invest in property, but you're spending almost the equivalent to your annual salary. People on 100 grand that drive a $100,000 car. Oh, this is crazy, $60,000, $70,000 car. Take that money, go and put it into property. That property will increase. Like you said, that property did what? 200 grand?
Yeah.
No, you can't say that. No. And the car in 2 years isn't going to be worth that. So this is kind of, I'll always put this in here because I think I'd sort of keep beating this drum until people understand and go, what can I do? I'm like, this is one of the most tangible things you can do. look through every single dollar that goes in and out. Yes, you've got to go micro.
Yep.
You absolutely cut up your subscriptions. I don't know. At one stage, Bernie and I, we used to make coffee, and it was just more the practice. What are we saving? $5, $8 a day at that point. It wasn't, but it was the discipline. It was exactly as the mindset going, we are giving up something to get something bigger.
Yeah.
Maybe we probably would have spent it somewhere else, but it wasn't the point, right? It was just, hey, look, we're going to be deliberate around it. There's some discipline that comes with it. So, mate, I'm just so excited to see where this takes you, both from an industry perspective, from a portfolio perspective. What you're doing for young Australians, I think is fantastic as well. There's so many lives that you're changing. Mate, you won't see that. It's like that whole bamboo analogy, like the first
planting
years,
seeds. Yep.
You don't see much in the 6th year, it kind of shoots out the ground. That's what property investing is, a little bit of delayed gratification. Now, you obviously have some great wins in a short period of time. For some others, the property might take a little bit longer to appreciate. How do you tell someone, hey, mate, this is just a slightly slower burn?
For sure. I mean, it is a long-term game. We're not buying into, I'm not a house flipper by any means. Yes, I've followed data and I've bought in locations that are fortunate to see growth. But I mean, a lot of people have seen growth that have invested anywhere in Australia the last 5 years. There has been a lot of growth around, but I mean, this isn't a short-term game. You're in property for the long term. Like, you should, in my opinion, you shouldn't be looking to buy property if you're not looking to hold it for at least 3 to 5 minimum years, probably longer. Like, this is not the sales cost to sell, CGT, stamp duty to rebuy. It becomes a pretty expensive game if we're constantly selling. So, like, I just feel like you've just got to have that longer term mindset. What are you working towards long term? It's not going to grow overnight. There are going to be ups, downs, plateaus in property markets, but it's just hold on for the long term.
Yeah, game of grip strength.
Yeah.
So a young person listening goes, okay, give me all the good, bad, ugly. So speaking about all the upside, the downside, are you dipping into your cash? Is there negative cash flow in your portfolio?
For sure, yeah. So my portfolio cost me in the ballpark of 15 to 17 grand. So it's not crazy for
a year, 15 grand.
Yeah.
Okay.
And that's negative gearing, tax back. Yeah.
So $300 a week, you're out of pocket.
Roughly.
I mean, that's what we say. Generally, each property's going to see you back at least $100 a week, and he's starting out as well. Your real rents have probably gone up, especially for shows when you bought in versus what they are now. So you're holding for $150 a week. That's what I said to anyone. I mean, you do 3 hours on a shift. What were you earning? $30 an hour?
30, 40, yep.
So probably costing you $150, 4 or 5 hours that you've got to try and maybe a little bit more with tax.
Yep.
But you're going to get this back from you said negative gearing. You're going to get this back as well. So if you're going, hey, how do I stop the rot or stem the hemorrhaging around cash flow, or pick up a second job?
Yep.
What's the problem?
Absolutely. I mean, and it probably comes down to my investing ethos too. I'm not buying, like, my borrowing capacity didn't allow. I wasn't buying blue chip properties in a city because I just couldn't afford that. So they were regional markets. I mean, I did buy in Perth, which was borderline a regional market at the time, but like, they are high yielding properties. There's not one type of property that suits everyone and suits their strategy. So for me, not a high income earner, I needed that high yield and I needed that growth if I wanted to build that portfolio sooner. But I feel like people probably overestimate how much a property really costs you. Like, I mean, as I said, my property portfolio is just ticking over $2 million worth, and it cost me 15 grand a year to hold. But I mean, capital growth on that, if it does 10%, which is probably been doing 20% a year, like 10% this year, that's 200 grand of growth, and it's cost me 15 out of pocket to hold it.
So just to connect those dots, you're out of pocket 15 grand, let's call it even 17, maybe even 20 grand. We'll round up and go 20 grand with some haters. Portfolio worth $2 million. We're saying growth, you might get 10%, which means the portfolio is grown by $200,000.
Yeah.
So you got to spend 20 grand to make 200 grand.
Do it every day of the week.
100%. Well, where do I sign up?
Yeah.
Yeah. Again, a young person going, okay, so we talked about cash flow. Risks. Have you had any horror stories? Have you had any repairs or maintenance that you just go, man?
Yeah. I mean, every property investor, there's always going to be maintenance, as we said, not sunshine and rainbows, but like, in terms of mitigating that, which I feel like that's probably a thing a lot of clients, when they're getting into it, they're always worried about, like, what if tenants stop paying? What if they ruin a property? What if it burns down? It's like, there's insurances. That's why you pay it. Like, the building landlord. Absolutely.
So
Everything's
accident
insured.
happens in your car gets burnt.
Yeah.
That's what insurance is there for. I think sometimes they think properties are very different.
Yeah, absolutely. If anything, it's like it's a bigger investment. It needs to be insured. So like building insurance, landlord insurance. I have my like buffers in place for each property in the offset, so that if something, the aircon was to break or roof was to have a big issue or something, like I've got those buffers. So like going to sleep at night as a 25-year-old with over $1 million worth of debt, it's like, shit, got a lot of debt I've got to pay off. But it's like, I don't worry about it. I don't lose a wink of sleep. One, because I know what I'm doing long term is going to provide my future self the life I want to live. And you've got to take action. There is risk associated with it. But I also know that I've got the processes in place to mitigate these risks, so that if my renters were to stop paying tomorrow or burn down, like I'm covered. I'm going to be okay. I've got buffers. I've got the right insurances.
Yeah.
And you can still invest and still be very, I guess, protective of that asset.
I love it. How much buffers do you keep in place as a rule of thumb? This is your rule of thumb. It's not
For sure.
the golden rule.
Because I have a roughly 5 to 10,000 per property. But it does vary. Like, I mean, if it's an older property, if it's a more expensive property, like there may be more maintenance that you need. So for me, I normally try and keep around $30,000 in a buffer, just knowing for those 3 investment properties.
Everyone's sleep at night number is different. So again, if you're doing your math, and I'm like, okay, look, start somewhere, $1,000, and then you can just keep adding to that as well. But yeah, generally kind of, 2, 3 to 5 grand, depending on the type of property that you're looking to buy as well. That's really good sage advice there, mate. I've got a couple rapid fire questions, if that's all right. All right. Worst mistakes young buyers make.
Worst mistake young buyers make. I feel like rushing into their first deal. Like, I'm all for getting into the market, but rushing into your first deal without much thought process. So biggest mistake I see with that is people just rushing in and completely maxing out their borrowing power with no plan. And then they wonder why they're stuck at one and they can't move from there. So rushing in and not, I guess, chatting to a broker and really stepping out your plan.
Cool. This is meant to be rapid fire, but
Sorry.
I'm going to go down a rabbit hole, not you, me. You say that people get stuck.
Yeah.
Right. I think I have a bit more empathy for people that are stuck because they've never been shown a way to get past that. And I'll tell you why. And you probably had this when I spoke to my broker and they said, that's it, I'm done. I was like, did they explain what happens after? Like, no. And so most brokers are doing a loan. They're not doing the plan. They're not doing the strategy, right? Whereas you and I probably see that everyone's showing you our strategy. They're like, yeah, but when you do this one, here's when you can do the next one, and here's when you can do the one after that. And but their mind's blown. I was like, what do you mean? This is what I'd expect if I went to a broker as well.
Sure.
So the whole notion that people get stuck is not their fault. They didn't, and BAs will say, no, they bought the wrong property. They bought the wrong market. No, I just genuinely think they didn't see there was a vision big enough to get the 3, and here's what they needed to do, working backwards on that as well, right? So I find it's unfair when they go to your, like, you didn't know, like, you just weren't shown a way.
Absolutely. Getting the right people in your corner. Like, if you're buying that first, that's when you're already planning for the second. Because if you go and rush and buy that first without that, at least a plan or know what's coming next. Like, every time I bought a property, I was always asking my broker. I was probably a pain in the ass to him, but it was, well, how do I get to the next? What do I need this yield to be to allow me to continue buying something? And that's what we are as brokers.
And I think that's where mortgage broking is rapidly shifting. You and I probably sit in a unique part in the market, which is strategic mortgage broking. It's not just, hey, we're going to refinance you to save you money and make a few bucks that way and justify our worth. It's going, no, I will only win at this when your portfolio grows, because we have a lag factor. We only get paid after the loans are settled and after they grow a portfolio. So I've got a vested interest. If you're saying that you actually want to grow your portfolio, I'm going to be on this journey with you because I'm the beneficiary after you've kind of succeeded as well. So I love it. Save aggressively or invest early?
Save aggressively or invest early. What's that Mexican ad? Why not both?
No, nice. Yeah.
Like, the hardest part of getting into your first property is saving that deposit. There's no 2 ways around it. You're going to have to sacrifice. You're probably going to have to work an extra job. You're going to have to save a little harder than what you used to, tighten the belt, but save aggressively and then invest when you're ready. Like, as soon as you're ready to go, don't sit on the sidelines. There's no perfect time to take action. Don't wait for what are rates doing? What's this market doing? What policy's changing? Like, they're things that we are out of our control. if you're in the position to buy and that's what the goal was to do, take action.
It's interesting because parents will complain about their kids can't get into the property market, right?
Mm-hmm.
But then I speak to parents, I'm like, what are you doing to help your kids get into the property market
Yeah.
as well? Like, oh, not our responsibility. I'm like, well, whose is it?
Yeah.
The government's. The government's not coming to save your kids. And I think there's a really good way, especially when you're low deposit, a guarantor option can be an extremely good way to get into the market. One is fully deductible debt, right? You don't need cash down.
Yeah.
You can genuinely release a guarantor within probably about 18 months if it's a high growth asset as well.
Mm-hmm.
So there's an exit strategy. Parents have had to put cash down, which is funded through equity.
Mm-hmm.
I find it's the parents that probably mess up this, like that
They have the
cook the
issue.
deal
Mm-hmm.
as opposed to anyone else.
Yeah.
What's been your experiences?
For sure. I mean, guarantor loans is massive. We do a handful of them a week, and it's perfect for those, like say the uni goer that doesn't have massive savings because they've been full-time at uni or whatever, and now they've come out and they're in a grad role, and all of a sudden they're on 80, 100 grand, whatever the role may be, and it's like they've got the borrowing power, but they don't have the deposits to get in themselves. But also, fair chance, if your parents have bought a property in Australia and they've had it for more than 5 years, they're going to have equity in their property. So I see it as well. It's more of an issue with the parents getting over, I guess, their fear of what happens with the guarantor loans, which I feel like there's probably not enough information out there that the risks of a guarantor aren't as what they kind of are cracked out.
And
to
they're
be.
looking for the risk. I'm like, sorry guys, there's no risk here.
Yeah.
Like there is risk, but it's so minute that the parents probably get sold. Mate, you and I can go through it. The banks have then got to go through hardship, got to go through legal, got to go through, mediation to get to the point that they're taking a parent's property. Mate, they'd sell the kid's property first.
Absolutely. And it's at the end of the day, like, especially when it's like we're investment savvy brokers, like it's for an investment property. So like in terms of they lost their jobs or anything like that, we still got the rental income coming in. It's tax deductible, like that.
Yeah,
That's very low risk in my opinion, especially when you buy a great property. So yeah, I see more of an issue with the parents as well. But I feel like it's a little bit rich. It's always we got to cut out the avocado on toast. But I mean, if you're a parent and you've got equity in your property, which as I said, a lot of Australians that own a property and have had it for 5 years plus, there's a fair chance that equity you can help your kids, and you can help multiple kids into it as well. Like we've helped 2 brothers. Parents had enough equity, both of them, guarantor loans, $0 down. They had money, but choosing to keep that as a bigger buffer to roll it into the second one eventually.
Exactly it. Property 1, guarantor. Property 2, use your cash.
Yep.
Property 3, release the guarantor. It's like, boom,
bang, right.
I think you and I can probably see it in our heads when we've done it.
Yep.
And it's not through a lack of emotional intelligence, but when we tell people, bang, 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 it's pretty easy. It's like, it's easy because there's no smoke and mirrors here. This is, a banker's rubber stamp this to go, yes, we will do it.
Yep.
And there's only a handful, like even before your time, mate. When I started years ago, there'd be a number of lenders doing guarantor loans. After the Royal Commission, it would drop down to like 5 or 6, right? I mean, literally could tell you CBA, NAB will do second, Bankwest, ANZ St. George, Westpac, for example. But you don't really have too many in the mix doing guarantor loans now, right? So yeah, it's got so much more tighter, regulated. It should give people a sleep at night factor.
Yeah.
If you had to start again tomorrow, what would you do differently?
If I was to start again tomorrow, I mean, I wouldn't change too much with my journey. The biggest thing I guess I would kind of alter to a degree is my urgency around education. So I feel like when I started, yes, I was reading books, I had goals, I was listening to podcasts, but I didn't put enough urgency on like seeking that education quicker. And it's like the difference between getting in 6 months, 12 months earlier into your next deal in some of these markets, like it could be hundreds of thousands of dollars. So I feel like seeking that education out sooner, I wouldn't change much of my journey other than, go get that education sooner, invest in myself sooner, because I mean, I've done it relatively quickly in the time frame like that I've been able to achieve these 4 property purchases. But if I put a bigger urgency on getting educated sooner, the quicker you know how to invest, the quicker you know how to get into that next deal, the impacts, they just keep compounding. So urgency on education, that would be a thing I'd change.
Excellent. Biggest lie young Australians believe about property?
Biggest lie. I mean, there's plenty of myths like the 20% deposit required. It's impossible to get in. What would be the biggest lie? I don't want to keep harping on it, but like probably that it is harder to get in now. I feel like there's like, I mean, not mentioning the guarantor loans again, but that's a bloody great way to get in without even needing a deposit. Obviously, you've got to have parents and stuff like that own a property, but there's a fair chunk of Australians that have either a loan on their property or a fully unencumbered property. So, I mean, in terms of getting into the property market, I feel like people think it's harder when I hope my content comes across that it's only hard if you're not willing to kind of put your work in. I feel like you choose your hard. So it's either you put that work in now, you pick up that second job when you're in your 20s and you've got no responsibilities, you've got no kids, your job's not like, you're not where you're at the pinnacle of your career, like responsibilities wise and time wise. Like that's your best chance to get
Cafes are always hiring.
Absolutely. And it's like, put that pride aside. Like people used to always ask me like, oh, are you doing anything else other than BP when they'd see me there? And I'm like, no, just working here. Cause I used to love people underestimating me, knowing what I was working on in the background and until I started posting and then people knew what I was kind of working towards. But yeah, just kind of getting rid of that myth that it is impossible. It is so hard to get in. It is hard, but it's like, choose your hard. It's either going to be hard life early or hard life late. And I sure as crap, I don't want to keep saying shit, sure as crap, don't want to be like playing chasey in my 30s, 40s and 50s, trying to look after my retirement. So I'd rather put the work in early.
Nicely said. Has your inner circle changed based on your success?
Not so much change. I mean, I've been very fortunate with like content and putting yourself out there, especially in a small town, like easy to
That's what I
crap
mean,
from
yeah.
people. And like, I definitely, like I always told the boys and my mates, like, I don't want you to change, like keep giving me crap for videos, all that kind of stuff. But I've always had really strong support. I've probably got a handful of mates, not the big circles you have when you're in high school and all that kind of stuff. My circle is definitely a lot smaller now. But I've just got really good support systems. Both my family and my mates are very supportive of what I'm doing. So I haven't it's not like I've dropped off mates or anything like that. I've just gotten really tight with a handful of my mates, but also my circle's gotten closer. And I feel like the more I surround myself with other people like in the property industry, other business owners, like that's what's going to take me to the next level. So I've made a conscious effort the last 12 months in particular to try and start getting in these circles that a regional Victorian boy that started a business probably shouldn't be in or anything like that. So trying to get the people that have done what you want to do, get like ambitious people around you, because I feel like that it all passes over. If you're surrounded by ambitious people, you fair chance you're going to be ambitious. If you're surrounded by people with victim mindset all the time, you're probably going to have some sort of victim mindset as well. So I've got my mates, got my family, so that support system hasn't really changed, but I have opened myself up to trying to get some really cool people around me as well.
I love it. It's like what you said with compounding growth on properties or in a share market, but even just that energy, I find that compounds as well. Like when you're around really good people that are like, mate, they're solving some bigger problems. I had a podcast with Jack Henderson.
Yeah.
I'm this like $62 million portfolio. I came home, I said to my wife, like, am I not thinking big enough? And she's like, I've been trying to do it for a little while. And even that challenge, like that, when you're around those cats and you're like, yeah, that's going to challenge me. And I thought, I'm doing okay. It's like, yeah, it's not a competition or I feel like there's an inferior. It's going, mate, they're saying, look, come on. Like, again, we talk about potential. You can do it. Yeah. I think you're probably, when you talk about you're going to pass this on, you're not here to motivate people. You're not here to inspire you. I'm here to lead. Here's how you can get it done. And you're literally dropping the breadcrumbs to people watching on your socials going, here's how you can do it. And those that are choosing to then do it and pick up the breadcrumbs, they will lead and get to that point where they can, pull the trigger and buy their first, second, third, fourth, probably like you've done. And the young Australians that are choosing to then, it's the government's responsibility. It's my parents' responsibility. The system's stacked against me. Misery loves company, and they will find the tribe that believe that the system is set up for them to fail. They'll go, mate, the bloody war and the runs, conjured up by the Illuminati or whoever it is, and they can sit in that misery, or it's like people are just going to go, I'm just going to get on with this. No one's coming to save me. I think that's what happens when you come out of your 20s and maybe into your 30s. There's a penny drop moment. I think that's why the first home buyer age sits at 37. I think they get to their mid-30s going, all right, no one's coming to save me. I've got to do this on my own. And I know I've felt that. I don't have family money coming my way, nor does Bernadette. And I think with that comes a bit of hunger in the belly to go, bloody hell, man, I need to roll my sleeves up and get this done before, like you said, I want to play catch up later in life. And I think there's a certain crossroads that some people will then accept that as their fate, and others that will continue to bitch and moan, unfortunately, get left behind.
Absolutely. Totally agree, mate.
Mate, I love how you're on your energy. In broker land, let me tell you, man, I don't hang out with too many brokers. You are definitely going to be a broker to watch in the future. I'm so excited by the fact that one, you've made the energy and effort to come down to our office and spend some time. And I want to repay that by showing you exactly what we do on a day-to-day basis. But I think just overall as a good human, man, keep doing what you're doing.
No, appreciate it, Aaron. Thanks for having me.
Appreciate it. If you've loved this episode, we'll include all the details for Harley Giddings' social, so you can check him out, stay up to date on what he's doing personally and on his property journey as well. If you've loved this episode, share it with your significant other, share it with a friend that you think, hey, mate, this might be the episode that helps change the way that you get into the property market, because the property market rewards action takers and decision makers. That's a wrap for another episode of the Australian Property Investment Podcast. We'll talk to you soon. If this episode has got you thinking about taking the next step and building a property portfolio, we'd love to have a chat, and you can book in a strategy session call with our team. Check out ateliawealth.com.au. Thanks very much for listening to our podcast. Make sure you like, subscribe, or follow on whatever platform you're listening to as well, so this episode comes straight to you. We release a new episode every Monday morning at 7. We'll talk to you soon.